there. And it's our top option story, big box blues. How do you like that one? Walmart posted a lackluster earnings forecast today, but does the options market think that there's possibly a good holiday play? Let's go bring into the experts, or let's dig into the experts here. Tim Travis, TNT Capital. Let's talk about Walmart because it's a huge drag on the markets today. The biggest decliner really in terms of points off the Dow Jones Industrial Average today. What exactly is the view on Walmart, and why exactly has it got traders' attention today?
Well, Dominic, right now we think it's fairly valued. The stock's rallied a lot. It pays a nice dividend, about 2.2%. The company's operating very well. They've made some improvements. They're focusing on their neighborhood market concept, which I think will steal market share from the traditional grocery stores. But I believe the stock's about fairly valued, so I wouldn't be a huge buyer at these levels.
Now as you look at Walmart, we know that their earnings forecast may have missed some analyst estimates here, but there is some indication right now that there's a trade to be made. There's an opportunity to perhaps enhance some of your returns if you already do own the stock. Talk to us a little bit about what your strategy is here.
Right. Well, the strategy that we would use is we'd sell January 2014 $70 call. That's going for between $3.80 and $4 last time we checked. So what that does is that generates about 6% of income on the maximum risk. Plus, you're still getting that 2.2% dividend. It certainly caps your upside. But because we're not that bullish on the stock from these levels, we feel that that's a good way for people that want to protect their position that they can do so.
So you're talking about covered calls, meaning if you already own Walmart stock, you can sell somebody else the right to buy that stock from you at a higher price in the future, right?
That's exactly right, yes.
Now, if you look at the picture for Walmart, you're looking at January 2014 options. That's a full year plus out from where we are right now. Any reason why you think that Walmart maybe can't even go beyond 70, even going to January 2014?
You know, Dominic, I think it can go above 70, but I don't think it could go materially higher. So I think what you're looking at is really, if the stock goes to about, let's say, $74, you're as good doing this strategy as you would have been just being long the stock. So I feel like it's a safer way to play it. I'm not that bullish on the consumer going into 2013. I've got some legitimate concerns in that area. And so that's why I'm playing it very conservatively if I were to play Walmart at these levels.
Now, Tim, talk to us a little bit quickly here about your macro view. You're not as bullish on the consumers as some other strategists, some other analysts out there. How exactly are you advising clients about how to play that particular downside, if any, going into the next year?
I think you just have to be a real stock picker right now. I'm really staying away from anything that is highly reliant on global growth. I'm a lot more bearish on the overall economy and consumer spending in particularly than most people are probably.
Gotcha, Tim. Thank you so much for the help on that. That's Tim Travis over there, TNT Capital. Viewers, bottom line on this options for the options update here. Tim Travis, TNT Capital, says valuation is fairly stretched at Walmart. If you are looking to get into the stock, he says wait. But if you do own it, he suggests selling the January 2014 $70 covered call option. So that does it for the options.